Thank you, Chairman McHenry, and thank you, Ranking Member Waters, for holding this hearing, and thank you to our witnesses. It's a pleasure and rare honor to have you all here together. Chair Gensler, earlier this year, the Securities and Exchange Commission suspended the Consolidated Audit Trail, or CAT fee, filings to allow for public comment and to evaluate compliance with Exchange Act requirements. To circumvent this suspension, the exchanges withdrew those filings and submitted identical filings in August. Despite its failure to address any of the concerns raised by commenters, the SEC has now allowed these identical fee filings to go into effect. Chair Gensler, can you identify any changes made in the August fee filings that addressed concerns raised by commenters or improved compliance with the Exchange Act requirements?
I could have staff get back to you, but if I recall, there were changes in those filings.
But Chairman Gensler, the truth is that the fee filings are identical. Not only did the SEC fail to consider commenters' concerns, but it appears that the SEC is actively circumventing the judicial process by allowing these filings to go into effect while there is pending litigation challenging the CAT's funding model. Last week during the Digital Assets Subcommittee hearing, former SEC Commissioner and Chief Legal Officer at Robinhood, Dan Gallagher, testified about the lack of a workable process for crypto platforms to register with the SEC. Chair Gensler, are firms that receive approval to operate as a special purpose broker-dealer, or SPBD, able to custody digital asset securities that have not been previously registered with the SEC or received an exemption? Yes or no?
They're not allowed to custody non-securities.
It was reported in May of this year that Prometheum had soft launched its Ether custody service. Chair Gensler, given that Ether was not registered and did not receive an exemption, would Prometheum be able to custody Ether using its SPBD?
I want to be careful here because I don't want to comment on one specific registrant, but under the special purpose broker-dealer regime that was adopted 4 years ago, to get the benefits of that, the firms are not to custody non-securities.
Okay. Well, thank you for the clarity. Commissioner Peirce, this situation highlights one of my concerns about how the SEC is approaching digital asset regulation. Among members of this committee, we are debating whether the current rules are sufficient, while at the same time, the SEC is trying to modify existing rules, albeit not effectively, in my opinion, to seemingly provide some clarity to market participants. Can you describe your concerns with how the SEC has comprehensively approached digital asset regulation?
I think the first problem is that we've used enforcement as our leading foot instead of using regulation. And that could mean putting out guidance to say, here's what's clearly outside of the securities laws, and here's what fits within it. It could be initiating a rulemaking process. It could be working with the Commodity Futures Trading Commission to figure out where jurisdictional lines lie. So there's a lot that we can do, but enforcement is not the way that we should. Of course, when there's fraud, that's one thing, but we're talking registration violations of entities that have tried to come in and register.
Thank you. I agree and appreciate that perspective. I want to quickly switch gears. I would like to discuss your position on the Financial Stability Oversight Council, or FSOC. Chair Gensler, this is your second time serving on the council, right?
That's correct.
When I'm back home in Tennessee's 6th District, my constituents are most concerned by the regional bank failures caused by interest rate risk, not non-bank financial intermediation or climate-related financial risk, or treasury market resilience, or digital asset risk that you and the council have claimed are the 4 major risks to the financial sector. Simply put, Chair Gensler, with all the experience and expertise that you claim to have in finance, you completely miss the real risk that hurt everyday Americans. And so, Commissioner Ueda, why is it that FSOC seems to care more about politics than policy or people?
In my view, the regional banking crisis was precisely the type of event that the FSOC was supposed to be on alert for. And the fact that they didn't realize inflation might trigger a rise in interest rates, which might affect bond prices, I find not reassuring.
Thank you, I agree, and I yield back.